following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the January 11th wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check on the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here. And more importantly, I'm here to serve you. So feel free to pick up that phone. Now is not too soon. 877-927-6648. Of course, internationally, 727-445-1044. You can send me an email, steve@tfnn.com, and instant messages will do inside of the Tiger's Den. So let's go ahead and get this show started on wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we've got the Dow traded up 28 points at 19,883. S&P is down a point, trading out at 2267. NDX 100 off 7, trading at 5027. NASDAQ Composite down 13 points. She's trading at 5538. Russell 2000 off 2 points, trading at 1368. So really nothing significant percentage-wise to the upside, to the downside. So flattish style market. The semiconductors are flat. They're up 86 pennies out here. Gold is up 7 buckaroonies, trading out at 11.93. Silver is flat, trading at 16.84. Light sweet crude is up $1.71. That's up 3 3/10% as we speak right now. That's trading out at 53.42. Leading the charge here to the upside is Intuitive Surgical, up $13, nearly 2%. MSC Industrial, or INDLU. Go ahead and figure out what that means, but it's MSC Direct. That's up 8%, or nearly $8. Cinex Corp up about $7. Workday is up 6. Granger Worldwide up 5. Arch Coal up 5. That's 7% to the upside. To the downside, you've got Biogen, BIIB, off $10. 3.6%, about 1.1 million shares thus far. To the downside, you've got Enteromedics, Inc., down, you don't want to enter there, down 38% off with volume of about 8 million shares. I don't know if that's high volume or not. I would imagine it is. IBB is down 10 buckaroonies. That's trading off 3.5%. We've got requests that have already come in, so we'll take a look at this flat market, try to figure out what it means. But let's go ahead and get to these requests that are out here. The first one coming in for the Mystic One inside of the Tiger's Den, who want to take a look at Detour Gold, is looking to get into Detour Gold. Now, the ticker symbol, folks, if you're following along on your computer systems, your screen's out here, DR, so that's the doctor. It's DRGDF. That is the ticker symbol. It's trading right now at about 1380. Is where it's trading right now. Now, with regard to wanting to get into this equity, remember, we got to kind of time things with the yen, with the really with the yen would be one of the things. But if we just take a look at just this equity, right now you've done volume about 9.2 million shares. On a straight line basis, meaning I divide by 3.5, multiply times 6.5 out here, right, just to get the estimated volume, about 16 million shares. Now, when this thing had last gapped up, because this is your gap target out here, right, this is what you're looking at, December 29th. Hard to determine what the real volume would be on December 29th. I mean, it reads 25 million shares. If 25 million shares is where this had gapped up and is coming back with 16 million shares, well, then the message there is this equity is pulling back with light volume. So that is a positive out here. The second positive that you would have when we take a look at Detour Gold is that price got down to nearly the bottom of its TAS daily box. 1326 was the number. The actual low today, 1340. Is that close enough for us? Absolutely, it's close enough. So there would be your second message out here. The price oscillator, it is the price oscillator. At the very bottom of my screen, you'll see the blue squiggly line. You'll see the zero line in yellow. So this is still below the zero line, which means you do not want to see this drop below that oscillator unchanged line. What is that priced at, Stephen? What does that mean? That means that this blue line down here would actually turn down. It would be subtle. That's why we go ahead on our charts. That's why subscribers take a look at the oscillator unchanged line on various instruments when we're taking a look at trading them. Because when it turns down below zero, it is very bearish. Now, what it's done today is it has tested that price level. So that would be the third, let's say, bullish piece of information for you, oh mystic one, in the den, because 1356 is the number. But do not let it get below that. I would say, since the TAS market profile, bottom of the box is so close at that 1325 area, 1325, 1326, depending on which computer system I look at, getting below there says you go all the way back down to the bottom. So this equity pulling back on light volume. That is not the case in at least two other gold equities that I looked at before coming on the show. One was Barrick Gold. The other was Newmont Mining. Those two which make up I don't know what the percentage is. Somebody in the den knows what percentage it makes up of the GDX, but a decent size of the GDX out there. Those two are pulling back with volume. So now, Mystic One, you've got to say, can the individual stock hold up better than the ETF out here? I don't know, but if you're looking for a place to get in, then now is the time to do it. Those would be the signals for me out here. Just make sure you use a wide enough stop. And if the trade starts going against you, you don't have to, you can stop out before price would get back to your stop, because this thing could certainly come all the way back to its lows out here in the 1169 area. 1258. Your stop has got to be below that no matter what, because that's the bottom of its TAS weekly profile, which also is the center of the box. And what that means, the interpretation here is that is strong support, 1258. And that would be the ideal place to get in on this equity, but maybe you want to scale in, so on and so forth. So I hope that assists you with regard to Detour Gold out there. We've also got another question that came in from Pradeep, who would like to take a look at ticker symbol NOC. So let's go take a look at Northrop Grumman. Now, Pradeep is holding the 230 put options. It's trading right now at 231. I looked at the email a while ago. My apology, because I don't know what your timing is on this. Here is what we know about Northrop Grumman. Number one, it is trading below daily and weekly TAS market profiles. In fact, we can see that the old support of the weekly is now resistance. There was a test of it back on January 9th. Now, it's pulling down into a candle session that has volume, 2.9 million shares on December 12th. It's doing it with light volume. That had volume of 2.9. Today, you're at 575. So it's light volume. It happens to be both a bullish and a bearish candle signal. Predicament out here. Why? Because it gapped to the downside. But at the end of the day, it actually formed a bullish hammer candle out here. What does that say? That says, hey, even if this equity continues to go lower out here, Pradeep, be paying close attention to the 220.72 level out there. I think 220 was your mark out here. Is it going to get down there in time for when your options expire? I don't know the answer to that, but it looks like the maximum that this thing is going to travel down to is 220.72. Steve Rhodes with TFNN. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Quiet market out here. Dow's down 6 points. S&P is off 6 as well. Let's go back to a couple of other requests, and we'll go to the markets, and we'll come back to some requests out here. So inside the Tiger's Den, Mike wanted to take a look at VXX. VXX is the ticker symbol out here. This is the iPath S&P 500 short-term futures contract. If we take a look, now, the important thing when you're trading something like this vehicle out here is not to be focused on the VIX index. Each day, the weighting with inside VXX is going to change. In fact, right now, what you're actually trading, or I'll say for the most part, what you are trading is the February futures contract for the VIX index. That's letter G out here. That represents 78.5%. The last time that I looked at this, I believe it was more like about 58, and that was just last week sometime out here. So you want to be paying attention to the components with inside of the ETF out here. Now, unfortunately, with regard to this instrument, I don't have it on my other system. I really can't do it while we're on the air. So I mean during this entire hour here, where I'd like to be able to look for some type of signal for you with regard to what it wants to do. If we just simply take a look at it out here, so this is 78% of the weighting inside VXX out here, the candle session right here on the trading day for you of January 6th, is pretty close to a hammer candle. Sometimes, that little wick on the top of it, can disqualify. So we're going to call that a hammer right now. And with regard to your position, if this thing gets below 1435 out there, you're going to suffer some turmoil, I would think, inside of VXX out there. I've got market profiles out here for you. But they don't get really come into play until about the $15 range out here, $15.69. So I'd like to do a further study for you, but I really need to put it on my other charting package, and I just can't do that for you. So the most important piece of information that I can relay to you is, as of yesterday's close, it was 78.5% of the February contract inside the VIX futures. So what that's also telling me is that this thing's going to be rolling, so that you're going to be trading February and March very soon out here, which is going to be a totally different look can be a different look than really looking at what the VIX index is saying. As an example, the VIX index today, cash index, up 4.4% as we speak right now. The February contract is up 1%. And the January contract up nearly 1.75%. We go all the way out to, at this stage here, to September, which is trading out at $19.15 versus $12.01 for the spot index. So that's about all that I can provide you with, Mike, with regard to the VXX out here. Hopefully that assists you. We also had a question from Tom. And Tom was asking about the GDX and was there an island top on January 5th? So let's go take a look at the GDX. Let me clean up the chart, meaning turn off some of these tools, then we'll put it back, and then we'll actually take a look at the GDX. So let's turn off our TAS profiles. Let's turn off some trend lines out here. And January 5th is the session right here where my crosshair is at. Now, an island top, Tom, there was a gap up. The high of the previous session, January 4th, was 22.01. The bottom of the January 5th was 22.35. So we've got a 34-cent gap out there. An island would have required, by the way, that pattern today was negated as a possibility of even happening. It was not an island top on January 5th. It was a gap up on January 5th. In order for there to be some type of island, what you would have need to have seen is price to gap below any of the lows of the sessions since January 4th, and for all of those sessions since January 4th to not get down to a low of 22.01, the actual high of January 4th. Well, today was a test of that gap. You got down to a price point of 21.90. So no, there is an island bottom inside of the GDX. That consists of the candle that formed during the December 14th was the beginning of the potential formation of that, and it was the confirmation on December 27th when the low of that was 1952, and the high during all those other prior sessions out there was, what was it, 1943 was the number versus the low of 1952. That created the very bullish island bottom. Now, what has GDX done today? You've got 47 million shares. We've been trading for nearly 4 hours. So let's go do a new straight line math on this. Not exactly 4 hours, but close enough. So we'll call it 47.3 million shares out there. Let me change this little straight line tool. So it says we're going to do about 76 million shares as this has moved lower. Now it moved higher with 135 million shares. So the GDX itself is moving lower with light volume. The problem is the components within inside it, and I don't have all the components. We can go, well, we could sort of figure it out, right? All I have to do is just simply open up the tool. Go partner. Well, let me see if it's on here. I don't know if it's going to show us or not. If not, I could just do a quick internet search. Yeah. So you've got Barrick Gold is 11%. Newmont Mining is 10%, right? So you have 21% of the index is right now, this is as of yesterday's close, is made up of that makes up the index. So yes, this is pulling back with light volume out here, and hopefully that answers your question with regard to the island top. No island top out there inside of the GDX. In fact, it's negated any potential possibility of that occurring because that gap has been closed. Test of a breakout gap. Now, and just look at the GDX, that would be very positive. But if we go take a look at Barrick Gold out here, I'm not changing. Please do not interpret this as some type of bearish, consideration. It's not. We've been long gold miners in a fairly good way out here. So we didn't tiptoe into this sector. But I do want to make sure I'm answering the question properly. Today's volume so far inside of Barrick Gold, 16.5 million shares. Let's go rerun the numbers out here. 16.5 gives us about 27 million shares. Made high with 26 million, and it's pulling back into that break. That was a breakout. So 26 million versus 26. So about the same volume. If volume lightens up during the next couple of hours out here, then this is going to really test its little gap from January 5th with lighter volume. It's going to test the candle session from December 29th with light volume because that's 29 million shares. And then with regard to the question from who was it that asked? Someone asked about taking a look at somebody in the Tiger's Den. the Mystic one, then that would bode well for saying, hey, that was the time to go ahead and get into a Detour Gold out here. Now, the candle today inside Barrick Gold right now, nice looking. It is a hammer as we speak on a pullback with potentially similar or maybe a light volume. We won't know till the end of the day out here. And if we take a look at that oscillator on change line, you can see the oscillator is already rising. I was just curious whether or not it actually tested it out. ABX is the ticker symbol, because a test and a rejection is a beautiful thing. Now, it's not anywhere near testing that level out here. That would actually take it down. Oh, I take that back. Today was a test and a rejection inside of Barrick Gold. Look at that, like right to the T. You don't think Stevie's red line is something to pay attention to? Mwah. Steve Rhodes, TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Let's answer the last question I have out here. I haven't checked my emails yet, but the ones that came in essence, during the first 5 minutes and prior to the show. And then let's go. I want to show you something interesting, very interesting out there. We'll go take a look at the ES Mini. And we can clearly identify a significant wall of resistance out there. So we'll take a look at that. But Larry had asked a question about the SPY and the XLE, the energy sector out here, and whether or not And really about the correlation. My apology, Larry, for not having that. Well, let me see if I can find it here. And sorry, I'm turning away from the microphone, but hopefully my voice is deep enough, and I do mean deep enough to now. Larry was looking at a 30-minute chart, and if it's okay with you, Larry, it has to be because I've got the daily chart up. We could do a 30-minute chart. What the heck? Let's do it. Let's do what Larry was asking for. I mean, you're going to spend time and actually write in. I ought to at least try to accommodate. I like to accommodate. So let's take a look at 30-minute charts out here for both of those instruments. Let's get this thing right if we can. The question is, could you possibly comment today about how the XLE is holding up the S&P index today? I have no TAS profile, so I'm blind as to whether it is at resistance levels. Said another way, is it true that the XLE needs to resume down action for the S&P to fail today? So as we take a look at it, so he's looking at a correlation, trying to identify a correlation between the SPY. So I'm using the SPY up on the top panel of my screen. So if we come back and we take a look at about 1 o'clock in the afternoon, December 13th, we can see that the SPY made a high out there. That's where my cross arrow is, a little white line out there. And you can see that also happened to be the high in the XLE. It would make sense for Larry to ask that question. If I come down here to a low that occurred inside of the SPY, that was on 2:30 in the afternoon on December 30th. That's a swing point low. So, hey, Larry, you're absolutely onto something out here with regard to, and so that would answer your question. You already knew the answer to the question, right? Because you can just so clearly see it out here with regard to the correlation. Now, some of that correlation, if you will, has come unglued a bit, right? Because you do have the XLE failing out here slightly. I haven't studied it enough, but you look, the XLE has been moving higher, and the SPY as we speak right now, and I'm referring to over the last 30 minutes from about 2:30, 3:30 yesterday, January 10th, through where we're at now. So you can see you've got a divergence here. Which one is it that's going to win the game? And I haven't done enough of a study on a 30-minute chart to be able to answer your question. So I say you're on to something. But what you did say is you didn't have the market profiles on a 30-minute basis out here. And so Stevie's going to give those profiles to you so that you've got them. And so we'll stick with the 30-minute. Let me turn off daily. Now, that's for the SPY. I'm going to give it to you for – what the heck did I do? Oh, I'm going to give it to you for both the SPY and for the XLE out here. So let's first do the SPY. Again, these are 30 minutes. These are the red lines. This is a different red line, but these are horizontal red lines. So your profiles, and the SPY is below that. So on a 30-minute basis, you can see an A to B equals CD to the downside that is forming out here. But the profile where, in essence, if you were long the SPYs, you want to see it, and you trade on a 30-minute basis, you want to see price get above 226.33 to then perhaps get you back to 226.82. Now, on the XLE, let's go take a look at it. Here's where we're going to see the opposite. And remember, we're using a line chart out here. And what the XLE has said is that it has a brand new profile that formed out here within the last 30 minutes. Well, really since 1 o'clock. So the last 34 minutes out here. And this profile suggests that the XLE ought to make its way up to 74.99. Now, it might have made its way up there. Let me go ahead and turn this to candlesticks versus the actual close of the session. That'll make it easier for us. Or I could just change it to a bar. And yes, it did. So what the XLE has also done here on a 30-minute basis, the reason why I said it should have hit 74.99 or should hit 74.99 when we were only looking at the line chart was because we knew the makeup of this most recent market profile that formed here since 1 o'clock. We know that the center of the box was closer to the bottom of the box out here. So this is a little bit of a bullish profile. So if the XLE on a 30-minute basis closes below 74.34, that'll just confirm further movements to the downside out there. So, Larry, I hope that answers your question and assists you. Now, I had mentioned with regard to, since we're in the S&P 500 vicinity out here, this is kind of interesting. And well, let's do this on a 10-minute basis. I want to do this here. Here's what we know is going on inside both the ES Mini and the NQ. So let's go ahead and steal something from Obi-Wan's arsenal, the extraordinary tool out here. When we take a look at volume, we take a look at the 10-minute bars for the ES Mini. And if we look at 11:30 this morning, as the ES Mini was pushing down 124,000 contracts. Now, the low that it generated out there was 22.55. We're trading inside that bar right now, but we've been trading in it since about 1 p.m. 22,000 for that first 10-minute bar, contracts 42,000. The last one out here, 37,000. Maybe it's building cause, as Tom likes to say, to move to lower lows out here, but it's moving lower with light volume. Hasn't tested the bottom of that swing point out here. The same can be said about the NQ out here. The NQ had its biggest volume spike to the downside in a 10-minute bar at 11:30, between 11:30 and 11:40. That had 17,000 contracts versus the last test was 5,400 contracts. And it's traded right down into a TAS profile. Now, this profile out here, if we look at this 10-minute, let me blow this up on the screen for you. Let me go ahead and turn off price. This profile, wide. You talk about wide. This thing is wide-a-rooney out here. Well, wide-a-rooney, when we take a look at 10-minute charts, and on this basis, it runs from 50.11 at the bottom to 50.43. Now, where is that point of control? Where is that center of the box? You know, where you want it on that wall out here. 50.21 is the name. Let's go see where price is trading right now. Watch 50.21. Watch 50.11. This is a bullish bias box out here for the NQ. You get above 50.21 out here, and what you should anticipate, what you should expect, no different than us looking at a 30-minute chart for the XLE, is this ought to make its way all the way back up to 50.43. Or a little short-term trend line, that is forming out here, but right in that vicinity. So we know that both the ES and the NQ on a 10-minute basis pushing down with light volume out here. Once the ES is able to clear, and I mean close, when I say clear, I mean close above 22.61. This is short-term trading out here. Close above 22.61. Then it, too, is likely off to the races. It does not have a brand-new TAS market profile, so its resistance is 22.63. Now, what I wanted to then move over into and show you was really, let's take a look at the daily, weekly, maybe 300-minute charts. I'm not sure what's going to pop up on my screen as I click to this out here, but it's going to show 4 different time frames. 240, that's the left-hand side, not the ultimate left-hand side, but the next to these symbols out here. 5-hour chart, 5-hour energy drink chart out here. That's 300 minutes. Then the daily, and then the weekly. Now, if you take a look at the 4-hour, the 5-hour, the daily chart, you'll see a diagonal upper left to lower right trend line out here. Folks, that is resistance in a big way. Now, the 240-minute chart just built a brand new profile during this 240-minute session. And there's a little short term. So 2270, 2271 is going to be pretty significant resistance inside of the ES Mini. So if you were playing this to the upside because it was light volume to the upside, play 2271-ish to the downside. Steve Rhodes with TFNN. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow is up 33 points. S&P is off 2. You got to love these guys that try to interrupt these hearings and so forth. Get a life, for God's sakes. Go contribute to somebody else. Go do something, some type of random act of kindness, for goodness sakes, for somebody else out there. Yeah, you know how I feel about that. I don't care what side of the aisle you're on. You're protesting a different way. For goodness sakes out here. Okay, Dano asked the question. Is today a complete failure for the dollar? Was that its last gasp? Does this pave the way for the gold contract to go to the 1,200? So let's try to answer both of those questions. Let's take a look at the U.S. dollar index. First, with regard to the answer to your question is yes, today was a failure. Now, how do we classify a failure out here? Well, here, let's do it a couple different ways. First off, right here in this center section of my screen, let me do this. Let me just turn off that volume here. This happens to be the price oscillator, which you can see is turning to the downside, right? So you can see that it's turning to the downside out here. What today's last gasp was as it moved higher was nothing more than a test of Stevie's red line. So here's the other chart where I've got all the math formulas already built in here for Stevie's red line. All that the U.S. dollar index was doing was testing a resistance area. That's what it did. So the first part of your question, was this a failure? Absolutely a failure out here. You would need to get the U.S. dollar index to close above Stevie's red line to say, well, maybe not so fast out here. But yes, Dano, it was a complete failure. Now let's come back to this chart. That's what was going on as price was moving up there. And we take a look at my red line on a couple of different instruments out here. You know how that works. And if you don't, just continue to stay tuned and listen to the archives or sign up for the newsletter. Or you've got all different types of ways to find out about this extraordinary tool. Here's what we know about the U.S. dollar index. The price oscillator, where it's right now it's measured at 0.67, is still above zero. The yellow line, right? We got yellow lines, we got red lines, we've got all kinds of colors out here. It's just like the rainbow, where there's a pot of gold at the end of that rainbow, and it is above zero. It just really says retracement is underway. So, Dano, when you say, is that a complete failure? Yes, but let's not just assume here that means it's over, it's headed south for whatever period of time. It needs to get through some areas of support. Now we're actually looking at the U.S. dollar dollar index, and we are looking at the March contract out here. And what price has done thus far is come back to a level of support, for goodness sakes. Happens to be the top of its TAS daily profile. That is measured at 101.218. The low is 101.240. Boy, that's pretty darn close for the type of work we do. So if it is use the word complete failure, yes, price tested resistance, but price has also tested support. Old resistance of that daily box out here. So not until it gets back into the box out here will we really classify it as a complete failure. Just like the last 4 trading sessions, today was a real test of resistance, but the last 4 trading sessions, in essence, really been sideways moves out here. And I don't know, Dano, that we can really conclude, conclude, I can get that word out, conclude 2 things. It's tested resistance, it's tested support. Both have held up. You need to see this get below 101.21. Then price ought to make a move down to the 100.48. Why? The daily box, the daily profile, that point of control closer to the top of the box just ought to send price down into that level. Now, with regard to, will that go ahead and take gold to the upside out here? Yeah, it's going to influence it. There's no question about that. But what's going to influence it even more is the yen. And so let's go take a look at the yen. We'll come back to gold out here, but let's go take a look at the yen futures. That way we've got very current, accurate information. Let's go ahead and turn off bonds. Let's turn off James Bond, that is. Let's turn off gold. And now let's just take a look at the Japanese yen. Now, the beauty of yen futures out here, what they are doing right now, they got above the TAS daily profile high back here on January 5th. That was a bullish sign. That said, okay, gold's going to keep running higher. Then we have Friday show up, and Friday is a test of a level of support, but gets back inside that daily box. However, slight close above it on the 9th, on Monday. Tuesday, a test and rejection of that TAS profile. You see a little green line out here, a little trend line that Stevie has, bouncing off of that, running into resistance again. So just like the U.S. dollar index is testing support and resistance, so too is this yen testing resistance. Now, this is the first time we've seen a test of that resistance zone. That is 0.87559. If gold is going to really take off, what you really need to see is a close above 87559 when you take a look at the yen futures out here. Then it's got freedom to just cruise. It's like driving down an expressway, coming to an area because you drive that route all the time, and based on the time of day, you're going to expect and anticipate traffic. Well, you know where the traffic jam is right here inside of the yen futures, and that's at 0.87559. Now let's go ahead and bring gold back up here. We'll take a look at the current contract for gold. We'll take a look at his TAS profiles. Well, let's go ahead and turn off the yen. We don't really need that right now, right? We already know what that story is, and what so this would say that if we just looked at this and we just believed it was just the U.S. dollar index that was the one that was impacting and affecting gold, well, we know what levels of support that has to break through. But just like we know the levels of resistance inside the yen, if those levels crack, then the answer is price will run to that 1211 area. And if they don't, I don't know. I know that it would be best for those conditions to be met out here. So hopefully, Dano, that answers. I think it was Dano. I can't remember. Maybe it was someone. See who was it? Dano. Hopefully that assists you. But you had said, can it go to the 1200s? Well, the high today is 1198.50. You got to admit that's pretty darn close to 1200 out there. And then what does all that mean for bonds? If we just take a look at Barry bonds, Bobby bonds, James bonds out here. What we're going to see is, what did I do? I did grab the wrong thing. We already looked at that. Let's go take a look at the 30-year Treasury out here. 30-year Treasury trading now inside its TAS daily profile. And I point you to the point. Hello, you think I could get maybe a little bit better vernacular than that? Let's go ahead and blow this up. Oh, I didn't turn something off. That's why. Let me see here. Get there we go. What we can see out here is that point of control. This is going to be the key area, 153.25. If the 30-year bond can get above that, then it's going to run to 156.07 out there. I anticipate that is what is going to take place out here. But the next level of and look, this thing is controlled by the yen as well, so it needs the yen to do. That's why I've got all three of these on this one chart here, so that I can pay attention to what is going on with those instruments. We can look at it on an intraday basis as well. So, Dano, I hope that answers your question out here, and thanks for writing in. We've also got another question that has come in from Emma Baker. She wants to know if I'd be interested in a co-author of a book with Brian Tracy. I get that email all the time out there. They're just trying to suck all that money out of you. And the answer would be yes, but I wouldn't want to pay the royalty fee. We've got to go take a look at, for Bill, HD, Home Depot, and NVIDIA. So we'll do that when we get back from this break. Would love to hear from you as well. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back. Dow's up 38 right now. S&P is off a couple of points. Bill sends in a request to take a look at 2 individual stocks. NVIDIA is the first one. The question is, Steve, I'm long NVIDIA and Home Depot. Will this have a chance to head back up? Thanks. And the question is, sure, it has a chance. The question is when, right? And I'm assuming you're meaning, right now. Let's take a look at what NVIDIA is doing. Huge run, has a high volume high out here, says that price should eventually get back out there. That's the December 28th high, 57 million shares. Right now, price is trading inside of the box. We looked at this the other day. We said this could be set up in A to B equals CD to the downside. Now we have maybe a day or 2 more days worth of information. Price was trading below Stevie's red line. That's the oscillator on change line. That refers to this bottom line right here. We can see that it's falling. But what we know that took place yesterday was a test of that level. It was trying to turn the table, and it didn't. Yes, it's trading with inside that TAS market profile. But until it closes above, today's figure would be 109.55. This says it wants lower price. That lower price right now, resistant is the of support, is going to be the bottom of that TAS profile. Daily profile, 10109. The volume down there, the B point of the potential A to B equals CD, has got volume of 37 million shares. You're at 9.2. Not going to bust it down today to the downside, pulling back on light volume. So does it have a chance to run to the highs? Yeah, it does, because, this is like I don't know if this is just building cause out here. It's in a nice bias, bullish bias daily box out here. But watch. For if this gets below 99.38, then you're going to have your A to B equals CD to the downside. But looks like a bunch of sideways action. Can't break resistance, can't break support, but at least we know where those levels are. Now, in the case of Home Depot, HD is the ticker symbol there. Let's check it out, see what it is doing. Right now, trading at 135 and 29 cents out here. And it's really a similar setup, Bill. Let's go take a look at Stevie's red line, a very similar setup to NVIDIA. Yesterday, a test of the red line just slightly closed over it, then gave it back up. It's trading below it. So it's really trading in this range here, the 136s area. That's what it needs to close above, to this 133, 133 and change out here. So not really doing a whole lot, but it does have selling pressure out here. So there's profits that are being taken. We know that's the case. There hasn't been any big volume to the downside, so to speak. Back yesterday's volume to the upside was 5.9 million shares. The last time it was down here a few days ago, 3.8 and 4.3 million shares. So just trading sideways out here. And in the case of Home Depot, when you're asking the question, does it have a chance to head back up? I'm thinking you're thinking of, when I say head back up, I'm really talking about the top of the box out here. In this case, the head back up would only be 137.32. But you're long these equities. I don't see any reason to get out. There's no real signal there. And even if you got an A to B equals CD to the downside, setting up a Gartley buy pattern, and I don't know where you're in on this, the chart in essence looks bullish. But that doesn't mean you're not going to feel selling pressure inside of it. So I hope that helps you out. Now, no more questions have come in, and we've got like a minute to go. So this has been good. I've gotten, I believe I have, been able to go through all of the questions that each of you had. So what do we do? Where are we at? We're in the sideways, choppy-ish market out here. The question is in fact the market forming a top like Stevie anticipates? And I'm starting to wane a little bit here, because even though I can give you some bearish signals inside of the Dow, man, right now I can tell you it's actually poised to say, you know what? I know what I typically do, Steve-O. I may not want to do that this year, which is make a top on January 6th. We're in iffy waters out here. But stay tuned. Muddy Waters is up next. No, David White's up next. And then we've got Wonderful Wednesday. That's a Tom O'Brien show from 3 to 5. So have a wonderful Wednesday, folks. I'm still short, but I'm questioning that decision. We'll be right back. See you tomorrow.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up to the up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.